So you want to start trading, but you have no idea where to begin. Trust me, I've been there. Staring at charts that look like alien language. Watching YouTube videos that assume you already know everything. It's overwhelming, but here's the truth. Starting trading is actually way easier than people make it seem. You don't need a finance degree, you don't need $10,000, you don't even need to understand complicated math. In fact, you can be ready to place your first trade in the next 10 minutes. Seriously. And by the end of this video, I'm going to show you exactly how, the exact platform to use, the exact broker to sign up with, and then we'll jump into the charts so you can actually understand what you're looking at. Let's get into it. Alright, before we can even talk about charts or strategies, you need two things to start trading. Number one, a trading platform. Number two, a broker. Without these, you literally can't trade. It's like trying to drive without a car. So let's get these set up right now. And don't worry, this is super simple. First up, the trading platform. This is where you'll see all the charts, place your trades, and manage everything. The platform we're using, MetaTrader 5, also called MT5. Now you might be wondering, why MT5? Simple, it's the most popular trading platform in the world. It's free, it's powerful, and pretty much every broker supports it. Here's how to get it. Just Google MetaTrader 5 download, click the official website, download it for Windows, Mac, or even your phone. Install it, takes like 2 minutes, and boom, you've got your trading platform. But here's the thing, MT5 by itself won't let you trade real money. To do that, you need to connect it to a broker. So what's a broker? Think of them as the middleman. They connect you to the actual market. When you want to buy or sell something, they execute the trade for you. Without a broker, MT5 is just a fancy chart viewer.
Ooh, fancy pants.
Now choosing the right broker is super important. Some have crazy high fees, some have terrible customer service, some aren't even legit. So let me save you the headache. The broker I use, Vantage Markets, and here's why they're perfect for beginners. They offer 1 to 500 leverage. Let me explain what that means real quick. With 1 to 500 leverage, you can control $500 worth of a trade with just $1. So even if you're starting with a small account like 100, you can still make meaningful trades and grow your account. Plus, they're fully regulated. Low fees, fast execution, and they work seamlessly with MT5.
Yes!
Signing up is stupid easy.
But I just wanted you to know, you see how easy I found you?
Go to the link in my description or bio, click open account, fill in your basic info, name, email, password, verify your identity. Takes like 5 minutes. Once you're approved, you deposit some money. You can start with as little as $50 to $100. Seriously, you don't need thousands to start. Then you'll get your MT5 login credentials via email. You take those credentials, plug them into MT5, and now you're connected. You can see real-time prices, place real trades. You're officially a trader. Alright, so now you've got MT5 downloaded, you've got your Vantage account set up, everything is connected, you're ready to actually start trading. But before you just start clicking buttons and hoping for the best, let's talk about what you're actually looking at. Let's dive into the charts. When you open MT5, you're going to see a chart. And at first, it might look confusing. All these lines and numbers and colors. But trust me, it's way simpler than it looks. Let's break it down. First, those green and red bars you see, those are candlesticks. Each candle represents a time period. Could be 1 minute, 5 minutes, 1 hour, whatever you choose. Green candle means price went up during that time. Red candle means price went down. The body of the candle shows where it opened and where it closed. The little lines sticking out, those are called wicks. They show the highest and lowest price during that period. A huge wick at the bottom can indicate that sellers wanted to push the price lower, but got completely absorbed by aggressive buyers. The same goes for huge wicks at the top. There, it's just the other way around. That's it. That's all a candlestick is. Simple, right? Now let's talk about the most important concept in trading. Support and resistance. This is the foundation of everything. Support is like the floor. It's a price level where buyers come in and push the price back up. Think of it like a trampoline. Price hits it and bounces. Resistance is the ceiling. It's where sellers come in and push the price back down. Here's how to find these levels on your chart. Look for areas where price bounced multiple times. See this level here? Price hit it once, twice, 3 times. Each time it bounced back up. That's support. Now look up here. Price hit this level and got rejected. Happened again and again. That's resistance. These zones are where the magic happens. When price comes back to these levels, big moves usually follow. If you can identify support and resistance, you're already ahead of 90% of beginners. Next up, trends. This one's even easier. Is the price making higher highs and higher lows over time? That's an uptrend. Is it making lower highs and lower lows? That's a downtrend. Is it just bouncing around randomly with no clear direction? That's choppy. Stay away from that. Here's the golden rule of trading: trade with the trend, never against it. If price is trending up, look for opportunities to buy. If price is trending down, look for opportunities to sell. Fighting the trend is like swimming against a current. Sure, you might make some progress, but you're working way harder than you need to. Just go with the flow. Alright, so now you understand candlesticks, support and resistance, and trends. Let's put it all together and find a trade. First, identify the trend. Are we going up or down? In this case, we're in an uptrend. Higher highs, higher lows, so we're looking to buy. Next, find a support level. There's one right here. Price bounced off it multiple times before. Now we wait for price to come back down to this support. Once it touches, that's our entry signal. We enter a buy trade, put our stop loss just below the support level, and set our take profit at the next resistance level above. That's it. That's a trade. Simple, clean. Not guessing, not hoping, just following the chart. So you found a good trade setup. Now comes the million-dollar question. How much should you actually trade? This is where lot size comes in, and most beginners get this completely wrong. Let me break it down for you. In MT5, when you place a trade, you have to choose a lot size. A standard lot is 100,000 units of currency. Sounds huge, right? But don't worry, you're not trading full lots when you're starting out. You'll be trading mini lots or micro lots. A mini lot is 0.1, that's 10,000 units. A micro lot is 0.01, that's 1,000 units. These smaller sizes let you control your risk. Here's the key: you never want to risk more than 2 to 5% of your account per trade. Let's do the math together. You've got $100 in your account. 5% of that is $5. That means each trade should only risk $5 maximum. Now, here's the thing. If you're opening multiple trades, you need to split that risk. So if you're opening 3 trades at the same time, you can risk about $150 to $2 per trade. That keeps your total risk at around 5 to 6%. For a $100 account opening multiple positions, your lot size should be around 0.01 to 0.02 per trade. That's micro lots. Super small, but that's exactly what you want when you're starting. As your account grows, your lot sizes grow with it. Grow to 500, now you can use 0.05 lots. Hit $1,000, you can bump it to 0.1 lots. The lot size scales with your account. But here's the rule: never go bigger just because you feel confident about a trade. Stick to the math. Stick to the percentages. That's how you survive long enough to actually become profitable. And remember, with that 1 to 500 leverage from Vantage, even these small lot sizes can give you solid returns. You don't need to go big to make money, you just need to be consistent and protect your capital. Before we wrap up, let me warn you about some mistakes beginners make. Mistake number 1, trading with emotions. If you lose a trade, don't immediately jump into another one to get revenge. That's how you blow up your account. Take a break, reset, come back with a clear head. Mistake number 2, not having a plan. Before you enter any trade, you should know where you're entering, where your stop loss is, where your take profit is. If you don't have answers to these 2 questions, don't take the trade. Simple as that. Alright, that's everything you need to actually start trading. You've got your platform, MetaTrader 5, you've got your broker, Vantage Markets, you understand the charts, candlesticks, support, resistance, trends. Now it's just about taking action. Don't overthink it, don't wait for the perfect moment, just start. Place a small trade, learn from it, adjust. Over time, you'll get better and better. Or join my free Telegram group, where I give you the perfect entries and exits, linked in bio. If this video helped you out, smash that like button, subscribe for more beginner-friendly content, and drop a comment letting me know, are you signing up with Vantage today? What are you most excited to trade? I'll answer questions in the comments. Alright, that's it. Welcome to the world of trading. I'll catch you in the next one. See ya.